Hi everyone, welcome to Thursday, where every Thursday we take a look at a share and review. Today we're going to take a look at Fletcher Building. Now this was a darling of the share market a number of years ago. However, it had a really big fall from grace, so we'll take a look at that. Now I mentioned it on Monday as well. I have got a assessment actually. It's called the Wheel of Financial Freedom. Now I would love for you to take it and just see how you're tracking. It measures your financial health against 8 different sectors. There's about 22 different questions. They're very simple to answer. And then at the end, it will give you a scorecard based on your answers as to how you're actually tracking. Now, this can be a really good way to find any perhaps glass ceilings, any hidden money blocks that you may have. And hopefully it will help you to get a North Star as to what you can improve with your own financial literacy. Hence why I'm doing this. So I've included the link in the notes, so I'd love for you to take it and I'd love your feedback on it. Now, before we go and take a look at Fletcher Building, I have to do the housekeeping. And of course, that is that this is for educational purposes only. It's no way intended to be personalised financial advice for anyone, even though this is a request from a viewer. Happy to do them. I'm not giving advice, just pointing you in the direction that I see when I look at the chart. So if you are also wanting a share reviewed, let me know. Let me know if you've got any questions. I'm here to help. Right, let's take a look. As you can see here, that's Fletcher Building up on the screen. And I've got this over the 5-year chart. And oh my gosh, if we look at this, you can see on the top left, it's really had a high there in the last 5 years of around $8 odd. And now we're down to just under 3. We're at $2.98. Let's move this in. Now, last week, you can see here we did have a positive week, which was really good. However, look at this. There is 10 weeks in a row that Fletcher Building has continued to fall. Really not a share I would personally want to be owning at this stage. Let's go and have a look at all. Simply what it will do is it will bring these candles up to monthly candles. And pretty much since Fletcher Building's been going, it had a high around May 2007 and it closed at that point at $12.97. So that's a huge fall. But basically from its highs back in May 2007 to now, you're looking at a nearly 80% fall in the value of that share if you were holding it at that particular time. That is a huge fall, and that's a huge amount of money that you would need to make back in order to recover. This is why I do harp on about using stop losses. Now, if I just go back, and this time we'll take a look at the 1-year chart. And over the last year, it's had a high at around January this year, actually, and it looks like it closed there of about $3.90. So it's round figures, it's fallen just under $1. Again, looking here, we've had 2 negative weeks in a row. You can see, in my opinion, that this share, even since this year, it is in a downward trajectory. Let's go and put our moving averages on and just see what they are telling us. So even though a share has been at its high back in 2007, obviously it can have signs of recovery. And you can see that basically earlier this year, it did hit those highs. But this is where our moving averages, in my view, really help us because it gives us a pattern as to what we're perhaps seeing at the moment. So I've just popped on the 30-day moving average and also the 15. You can see that these moving averages crossed on the 12th of February this year. The share has been falling since then, and the 15-day moving average is certainly trading below that 30. It's not looking at this stage on a daily chart that this is going to turn around and have any sort of upswing at this stage. Let's pop it on the 5 years and see what that's telling us. And really for the whole 5 years, with the exception of this period here, which was end of June 2023, we had a slight run up and then the moving averages crossed again later that year, so basically 3 months later. But for the last 5 years, we've really been in a huge downward trend. We had a slight cross of the moving averages to the upside back in October last year, and then it did have a good rally, but now you can see these moving averages have crossed again, and that share is trading below it. So for me, that is definitely not a share I would want to be owning. Now, if I was owning this particular share, let's take these moving averages off. And if you're thinking, my goodness, I really need to do something and I need to protect my capital, it's not too late. You can still put in a stop loss. So let's look at that. Let's look at trailing stop losses. There it is here. So I use a 21 period. I usually do the multiplier by 4. Make those buy stops white. Right, here we go. It is a bit hard to see, but if I zoom in, you've got these little dashed lines here. So really it was saying that based on where I would put my trailing stop, it's saying that we should be out of the market now. However, if you are still holding it at $2.98, you can simply take that ATR down the bottom, which is 0.22, times that by 4, which gives us 88 cents. So if we go at $2.98 and take off 88 cents, I would be having my stop loss at $2.10. Yes, depending on when you bought it, you could be having a significant fall on this particular share. But if you're putting all your hopes on this particular share having a recovery, you might be waiting a long time, or it may never happen, because that does happen with shares. I certainly had that happen when I first started doing share trading. The idea with share trading is to protect your capital. That's really important. So for me, I would not be definitely not looking at buying Fletcher Building, but I would be looking at putting some sort of mechanism in place to protect the capital that I do have. Because if you put in a trailing stop loss and it is going to start showing some form of recovery, then that's great. Just review that value each week, use the same system, taking the ATR times that by 21, and then taking that figure and times it by 4, and then taking that away from the closing value of the share price, and that will help you determine where you need to have your stop loss. I only ever move my stop losses up or at all as if the share itself has increased in value. Now, sometimes that ATR down the bottom may also have increased, and you can see it's got a little bit of a uptick here, so it has increased. It was down at around 21. It's only a cent, but needless to say, it's still increased. So there may be times that the share value has increased for the week. However, so has the ATR, and it may mean that the stock needs to be less than where it is currently. If that is my situation, which I do get, I will always leave my stop loss at the same figure. So it will just have a bit more of a gap, if you like, from where the share is trading to where the stop loss is. Obviously, when there's less volatility, that trailing stop will narrow. It will never take you out at the top of the market. However, it will protect your capital in the event of a downward trend. So I'll stop sharing. I've talked a lot there about stop losses. I hope you've got some value out of that. And I really hope that this has helped with those of you that are potentially holding Fletcher Building. Love your thoughts, love your comments, love your feedback. So do drop me a line, and remember to drop me a line as well if there is a share you would like me to take a review at in the coming weeks. Happy to do so. So until next week, do take care.